Bitcoin is once again testing its ability to stay above the daily trend line, a level that often determines strong price swings in either direction. Currently, holding above the $85,000 mark is crucial. If Bitcoin loses this area, we could see more downside pressure in the short term. However, reclaiming this trend zone could shift sentiment, with algorithmic strategies gradually transitioning from short to long positions. So far, it's been a decent start to the day, but there's still a long way to go, and volatility remains high. The recent tariff discussions have created uncertainty across the entire market. Since traders dislike ambiguity, today's resolution, whether positive or negative, could bring clarity. The $85,000 to $88,000 zone remains a key area to monitor. A bullish market structure could be confirmed if Bitcoin prints higher highs around the $90,000 to $96,000 range in the coming days, followed by a healthy higher low. Zooming out to the 3-day chart, there's an inverted head and shoulders pattern forming, a bullish reversal signal that should not be overlooked. If this structure plays out, without a fakeout, the technical target lies in the $96,000 to $97,000 range. This potential shift in momentum could mark a significant turning point in the mid-term Bitcoin trend. However, as always, confirmation through breakout and sustained volume will be key. If price action breaks above the neckline convincingly, it could trigger a wave of bullish sentiment across the crypto markets. Looking at Bitcoin's short-term price action, we've successfully reached our initial targets at $86,900 and $88,600. The groundwork for further upside could be set as long as Bitcoin stays above the $85,000 support in tomorrow's trading. However, closing below this critical level could introduce new risks to the current setup. We'll reassess the short-term outlook again tomorrow based on today's daily close to better understand the next possible movements. We've been highlighting the 85K to 88K range as a resistance block, and so far, that zone is acting accordingly. Whether Bitcoin can close above the daily trend remains a crucial question in the coming sessions. Right now, the trend line sits around the $84,000 to $85,000 range. As long as daily closes happen below this zone, the market stays in a risky area. On the other hand, closing above it could bring some short-term relief and a more stable sentiment. It's been a volatile day, and we'll need to see how the candle closes before making more confident predictions. Meanwhile, Trump's recent statements indicate a rather firm stance on tariffs, not as soft as some might have expected. But what really matters now is how the market reacts to it. Bitcoin failed to close above the daily trend, and while the move from $81,000 to $88,000 wasn't bad, adding over $7,000 in value, it was quickly followed by a sharp correction. Today's selling wasn't limited to crypto. U.S. equities also experienced a strong sell-off. If Bitcoin manages to dip just below the previous wicks and recover, $81,000 could still hold as support. That level surviving, especially while the S&P drops, could hint at some decoupling. Still, that's a big ask in such an uncertain environment. Trump's new tariffs are much harsher than expected. And unless the U.S. and other countries begin serious negotiations for tariff rollbacks, we could be entering a period of prolonged stress for equities and risk-on assets. Let's break it down with some key levels. If Bitcoin holds the $79,000 $81,000 zone and closes above $81,000, ideally closer to $80,000, a return to $85,000 $88,000 becomes possible. But if there's no strong buying in that range, we could revisit the blue band support zone between $70,000 and $79,000, a historical launchpad for major rallies. Historically, this band has offered major reversal potential, just like in the summer of 2024, when similar uncertainty preceded a move toward $120,000 and beyond. This has easily been the most difficult cycle yet. Trump keeps throwing curveballs into a market that's just beginning to find stability. But as always, when sentiment hits rock bottom and hope fades, the market often reverses. Coinbase data confirms that significant capital is quietly accumulating from the sidelines. Bitcoin couldn't close above the daily trend again. Still, the move from $81,000 to $88,000 added over $7,000 in value, a solid short-term rally. But after hitting that target, a strong wave of selling followed. Today, U.S. stock markets are also seeing heavy downward pressure. If Bitcoin dips slightly below the recent wicks and quickly recovers, it might hold the $81,000 level a bit longer. This could even be a chance to decouple from a falling S&P, although that's a big challenge in this market. Trump's new tariff package is aggressive. And unless serious talks begin between nations to reduce those tariffs, markets may remain under stress. Risk on assets, including crypto, could continue struggling. Let's break it down to price action. If Bitcoin manages to stay in the $79,000 $81,000 range and closes above $81,000, ideally near $80,000, a return to $85,000 $88,000 becomes likely. If not, and there isn't enough demand in that zone, we may retest the famous blue support cloud between $70,000 and $79,000, a historical launchpad for major rallies. We're currently in the most challenging cycle so far. Just when the market begins to digest one piece of news, another bomb drops. But history tells us, when all hope is lost and fear peaks, the market often reverses. Coinbase data suggests that significant accumulation is already happening on the dips. To wrap up, the cryptocurrency markets, especially Bitcoin, are going through a highly volatile phase. As of today, Bitcoin is trading around $76,622, marking a sharp decline of approximately 7.29% compared to the previous day's close. This drop comes amid rising uncertainty in global markets and the impact of the United States' new tariff policies. From a technical standpoint, Bitcoin is now approaching a critical support level near $77,000. If this level breaks, we could see increased selling pressure, potentially pushing the price down towards $74,000 or even lower. That's why it's more important than ever for investors to closely monitor price action and stick to solid risk management. Crypto markets can move fast and unpredictably, so staying informed is key. Thanks for watching. For more updates and analysis, make sure to subscribe to the channel and turn on notifications. And don't forget to share your thoughts and questions in the comments below.